Guys, first episode of Bids and Banter. I'm Nick Africano.
Jonathan Hodgkinson with Embrace.
We are real estate professionals. I'm a real estate agent. Jonathan is a senior loan officer, and we're just going to be shooting the shit on some real estate data, on appraisals, on contract structure. So we're just going to be riffing and talking about what's important and understanding the DMV real estate market and how to approach it this 2026
Yeah.
and what we've been approaching. So right now, what we actually want to do is trying to jump into the data. We want to thank our friends KVS Title for the data that we have. They have roughly, I guess, over the last 4 or 5 months, over 1,500 contracts that we're using as our sample size to discuss the important data on appraisal waivers, financing waivers, home inspection waivers, and buyer agent commission, which is now a big topic. So want to jump into that and then go from there. But Jonathan, I'll let you take the floor.
Yeah, man. No, I mean, again, shout out to KVS for getting us this data. It's a question that we have to field on almost every deal, right? Is when it gets to that point where it's time to write that offer. We walk them through the contingencies. Some buyers are more clued in than others, but basically, there's three big ones that they have to decide what they're going to do. We can do things on our side to protect them. I usually leave it to Nick to guide them on how competitive that situation is and whether it's necessary or not. But as we'll dive into it here, as the data shows, like apparently very necessary, right?
Yeah, and I'll tell you what, the offer structure, and we tell all of our clients, is going to be different for every house.
Yeah.
And depending on what market you're in, whether you're in Fairfax County or if you're in PG County in Maryland, we don't know what each house is going to bring, and so we have to go in with some sort of an idea. And again, whoever your agent is, just doing the job of getting the reconnaissance information of how many offers in hand you are. You going to set a deadline? What the showing activity has been like? What sort of things are going on with the house, so that way you have a full understanding. And so when you go in, you have, as a buyer, your head is filled with information of how to make a sound offer. And it's not just how waiving everything is going to make the most competitive offer. It's not necessary. But we'll see from this data from January of 2026 to today, what sort of things we've been seeing in the market, and you can see the different shifts that we have seen. So for like a quick insight, in January of 2026, 41% of contracts waived their appraisal contingency. And in April, that shot up to 50.
Yeah.
So it's like,
which is wild. I mean, 50. I appreciate, and again, shout out to KVS for the data. It is a smaller sample size, obviously, than all of the contracts that were written. But with them being one of the bigger players in title in our market, I would imagine that if we went to any of their competitors, we would see similar data. So, I mean, 50% is nuts.
It's crazy. And again, you also think you're in a high interest rate market.
Yeah.
I mean,
yeah.
We're at over 6%.
Yep.
Some are teetering 7 for some
Yep.
rates. I mean, it's so not only is there less inventory, there's higher interest rates, but you're also now having to give away protections that you may not have thought were. And this isn't reflective of national. This is for the local DC, Maryland, and Virginia market. And again, it really niches down to each county. Like I was saying, Fairfax County and Arlington County in Virginia are going to be different than Prince George's County and Montgomery County. Again, it's just different demographics, different income brackets. So there's a lot that go into this. And so let's take a property in Fairfax County, for example. We're going to imagine it's going to be competitive. So we're going to go in and say, hey, listing agent, what sort of things are you seeing? How many showings are you getting? Oh, we're getting a ton of showings. Open houses were crazy.
We've got 12 offers already.
We got 12 offers hands. There was one in Falls Church that our clients had 17 offers. So it's like, all right, how do we structure a contract like that? And so, unfortunately, waiving appraisal is one of those things.
Yeah.
And I'll let Jonathan touch on this, but what goes into an appraisal and what does that mean when you waive it? Like what risks are you at when you waive an appraisal?
Yeah, for sure. And just to touch on what you just said, we're going to talk about, waiving all of the contingencies and putting in a strong offer. And I was just telling you about the one I had this weekend, waived everything, solid offer, and we still didn't get it. You know what I mean? So this data really does reflect what we're seeing out there. But no, the appraisal, right? So you have two choices. You either keep the contingency or you don't. If you keep it, pretty self-explanatory. The appraiser comes out, takes a look at the property, puts his value on it. If it's what you need, the transaction continues as planned. If it's not, because you've kept that contingency, then you can go back to the sellers and obviously their agent or whoever's representing them. And you can have some back and forth there on negotiations and hopefully find a path forward.
Yeah.
But if not, you can walk away fully protected, no loss to your EMD, which is your deposit. And annoying, but back out there looking for a different house.
Yeah.
Right. So I mean, not the best, like little bit of a delay in the buyer's timeline, but everything fully protected, no real loss other than time.
Yeah.
Right. If you waive that and the exact same situation plays out, it really depends on how you've structured your offer. I mean, if they're putting the minimum down, which would be if they're first-time home buyers, conventional, that's 3%, FHA 3.5%. A little bit higher if they're not first-time home buyers. They don't really have any other option if they've waived that appraisal than to either cough up their EMD and walk away, or come to the table with the difference. The reason I bring in the down payment is if they put more down, we could in theory change the loan to value, and maybe then there's MI or something else. So it's still going to cost them more, but it's not going to be that big chunk of change that they would have to bring to the table and just full on pay the difference. Yeah. But I mean, whichever way you slice that, you're going in unprotected and praying, hoping, fingers crossed that you get that value you want. Otherwise, one way or the other, the buyer's on the hook for something, whether it's their EMD, change the LTV, mortgage insurance, bring the difference to the table. I mean, not all of those things hurt quite as much as each other, but it's all additional expense.
Absolutely.
Which is obviously not ideal. And I'm sure on your side, not something you want to have to tell your client when that appraisal comes in low, because it does happen.
Yeah.
I mean, unfortunately, we don't have the data here because the appraisals themselves aren't public record, but I wish we could pull the amount from the 50% that waived, or just in general, how many as a percentage came in low.
Yeah.
That would be really interesting to see. I guess, like you said, we could look at voided contracts and try to kind of get an idea. But again, most people in this market, they don't want to get back out there. They're not happy about it, but they try and figure out a path forwards, right?
And for first-time home buyers, why this is so crucial is because what I think Pat was saying and Pat is his sales manager, was talking about how 25% of the market is roughly first-time home buyers. And so in this area, again, since we're in a higher price point compared to nationally, where you're looking at average price points of $600,000, $700,000, $800,000 for a townhome for a lot of the time. In certain areas.
I mean, condos even $600,000 per condo, which is wild,
it's a lot of money. So if your monthly payment's $3,500, $4,000 a month, and you're only able to put down 5%, and you're in that tight position of an appraisal, every dollar matters. And I mean, there was a statistic, I think it was like 40% of first-time home buyers had parental help, but everyone's not fortunate enough to have that sort of help. So a lot of people are pulling from their IRAs, their 401ks, and again, if you have to cover that difference, you're behind, and then you've also lost the cash that you would have used for other things.
And that's the thing, right? Like, don't get me wrong, like the same as we all do in life, right? Like when something comes up that you didn't plan for, you figure it out. Like I'm not saying this is like destroying people's lives or anything, but why would you take that risk if there was a way to not take that risk?
Absolutely.
And that's what I don't, I don't like to see that when clients, and again, this is not an attempt to, take a stab at competitors. Most of the ones that I come across do a really, really good job of explaining this to their clients. So it's not a case of not being informed, but there is another option out there for them to not have to dip into savings, go to mommy and daddy, lose their EMD, whatever it may be. Like there is a path forwards there where, they can waive that and be protected. So
well, and just to give you guys an idea, and John, if you want to put this up on the board, in January, 41% waived the appraisal contingency.
Yeah. So we had what was January?
January.
was
Um,
41.
February 44%, so we already see it going up. March skyrockets 10% to 54%
And we all know
waived
why.
appraisal. Again, we were in that competitive situation where interest rates were below 6% for the first time in 2-3 years.
A long time. Yeah.
And so people are losing their minds. So, and then April, since we saw the interest rates come back up, we're at 50%. And then, you know, we'll get into the financing piece later, but 54%. So how many do you think, how many, like, let's just say if 1 in 10 or even 2 in 10, 20% of contracts didn't appraise.
Yeah, I mean, again, the sample size is getting smaller because, of course, like we don't have that data. But even just from personal experience, whether it was on your deals or with other agents, like we've had to waive a lot of appraisals, and in the 2 months we're talking about, like where it really ticked up, I had at least 4 come in low.
Yeah,
and I do okay, but I'm not doing like hundreds of millions of dollars of production over here. So the fact that I'm seeing that at my level, I can only imagine nationally, like or even in our market, like what that looks like, which is scary, man. When you think about it, like how many of those people had a plan, how many of those people lost the house because of it and some money, and maybe took them out of the market.
Yeah.
Right? Like, because that's the thing. Like, we talk about strategies and plans and paths forward, and hopefully that's the case. But worst case scenario, they lose the EMD.
Yep.
And that was part of their savings for that purchase. So either it pushes them into a lower price point or takes them out of the market completely.
Yeah.
Or because they waived a contractual protection.
Yeah.
Crazy. I mean, again, that's like nightmare worst case scenario, but like that happens.
Yeah, and again, in this market we've been seeing in DC, Maryland, and Virginia, I mean, since 2020, 2019, we've been seeing multiple offers on a lot of places. Now, there were some slow periods in like 2023, 24, where, they were getting some things. But again, if we're going to see interest rates below 6% again, which is possible.
Sign that deal.
Yeah. We're gonna be seeing those sort of things again, where March again was reflective of 54%. So that means like it, and again, this is all DC, Maryland, and Virginia. So there's other counties that may not be as aggressive as, say,
there's
Fairfax,
always going to be
Arlington,
pockets,
Montgomery.
I mean, like when we talk about some of the most competitive, and obviously we had some clients that I would consider it a sort of the higher price point. I mean, we were going fully naked, no appraisal, no financing, no nothing, and $50,000, $100,000 over the asking price. Now, obviously, as a ratio, it's not as much because the price point's higher, but like these are big numbers, and we were like 12th in line.
Yeah,
you know what I mean? It's like, so when people ask, like, "Oh, is anybody buying? The interest rates are so high." I'm like, "Yeah, they are."
Yeah,
and look what's happening. Like, you're actually getting very similar competitive situations like the ones we saw in COVID, with the rates being twice as high.
Yeah.
So it's wild.
And here's the thing that's going to make it more challenging, because millennials are set to take over the largest amount of assets in the world. But here's the problem: the baby boomers are still buying places.
Yeah.
And so not saying if you can't compete, then you're screwed. But like, if you're not trying, or if your goal is to purchase property, and maybe invest and buy more properties, you need to get in and you start somewhere. Because again, the baby boomers, for example, can have the financial well-being to be able to waive these things, which only makes the market that much harder. Because if you're shooting 100,000, you're pricing a lot of people out. So it's the strategies behind it and getting yourself in, because like myself and Jonathan, we both have kids, and it matters. Like, all right, we need to get in so we have a place, and the demand for housing has gone up. Rent is still going up. So it's all right, like, how can we maximize our dollar, our cash flow, and everything? Because again, buying, it's not for everyone, but if you do decide to take that plunge, how do we protect ourselves? Which I want to parlay into Jonathan's programs, like the property value certification, that does protect buyers from potentially having to face a low appraisal and ruining your chances of buying a home.
No, for sure. And this for me is where Embrace, like sales pitch alert, where Embrace genuinely do separate themselves from everybody else. And having worked at other companies, I feel like I can say that with some merit behind it. where we all get the question like, what's your rate, right? Mm-hmm. Obviously that's the focus of many buyers. At the end of the day, institutions are structured slightly differently, so there is some nuance there, but for the most part, like, we're all going off of the same economic data as each other. Like, we're all, like, look what happened. The Iran conflict happened, everyone's rates went up. Mm-hmm. It wasn't like anyone was able to protect themselves from the actual things that are going on in the world, right? So rate is one thing, and we are competitive there. But where Embrace, for me, really was very forward thinking, because they've been doing this for a while now. This isn't recent. I mean, what we're about to talk about, I think Embrace have had, and someone will correct me, but it's been about 6-7 years they've been doing this. So super, super smart. But what they did, instead of chasing random programs and, crazy low rates that come with all these different, requirements to actually secure that, and we do have a lot of programs, they looked at the actual process and was like, where can we differentiate ourselves from our competitors and capture more business because of that? And they're looking at this data. They're seeing these, back during COVID, same thing. They're seeing how many people are waiving all their contingencies. Like, there has to be a way we can protect them. And that's where the PVC came in. It stands for Property Value Certification, or CERT. And basically what they do, or what we do, we will take the property, whether it's for the listing agent, if you just want to know, or if we have a buyer, and we will give it a value internally. It's a general risk assessment. I won't go into the sort of secret sauce and give it all away, but essentially we will give that property a value, and then we will stand by that value, even if the appraisal comes in low. So you have situations where, let's say on the buyer side, buyer comes to me, or through Nick to me, Mr. Smith, he's looking to buy, this is the house, it's 600K, he's putting down 10%, 5%, whatever it may be, put in for a value cert, let me know what you get. And I can not only say yes or no, and don't get me wrong, it's a risk assessment, so it's not every single time, right? But more often than not, how many times have I had to turn around to you and say, I couldn't get one? Not many, right? It's very few and far between. And then at least right? Then you know up front, like, look, no one's protecting you here. This is what you're potentially facing. But 9 times out of 10, we get it. And beyond that, because we've already talked about going over ask, I can also give you a maximum value that I'll support at that loan to value. So Mr. Smith putting 10% down, it's 600K. Yes, we support 600K, and maybe we can support 620, 630, 640, 650, whatever it may be. And then that way you can waive the appraisal. The listing agent's like, sweet, no appraisal contingency. And then if it comes in at value, great, it came in at value, awesome, everyone's happy, the equity's there for the client, they got what they wanted, we're all good. If it comes in low, who cares? Yeah. We figure it out. We don't push that cost onto the client, and the client doesn't need to dip into savings, go to mommy and daddy for more money, now have mortgage insurance or more mortgage insurance or whatever it may be. And that for me was a game changer. And if I'm being completely honest, it was one of the reasons I moved, because I was sick of competing against it, like when I was at my old company, and we truly are the only ones that do it. Like, I don't know why no one else has, but I'm pretty happy they haven't, and hopefully it stays that way, because it is a game changer for us. I mean, to be able to say to your clients, don't worry, we got you. And we're not talking about like small amounts of money here. Like, this can go wrong really quickly. To be able to do that for them is massive. And obviously you guys love it. The listing agents love to hear about it, because they know it's not going to derail anything. They're not going to even, I mean, they'll keep the AMD, but they want to sell that house. So no, it's huge. And we love it.
No, I mean, and here's the thing too, like, to give you guys a real life example with Jonathan and I, with the rise of like off market listings, or how people know them as like pocket listings, sometimes you have to pay a premium to be able to get in and write an offer. And so a lot of them require waiving everything, because like, I'm not obligated to take it, because I can go on market and probably get what I want or more. And so we had clients who were buying in the Montgomery County market, and in order to get it, we had to waive everything. And Jonathan was up against a national lending company, and they're very well known, but he was able to beat them. Let's remove rate for a second, because the PVC, because the comps in their neighborhood did not necessarily support the value. So they were taking a blind risk of, all right, but With Jonathan coming in and saying, all right, we can back you up to this point, it came in at value. So we wrote the listing, the offer at list. Uh, Appraisal came in surprisingly actually higher, which was great for our clients. But again, in the event if it didn't, they would have been protected, and it would have been a huge savings for clients who are going to be first time parents. So there's so many things that go to it, and so why put yourself at risk knowing there are tools? And I'll tell all my clients, if I can give you every tool to protect yourself, I will.
Yeah.
And so like a home inspection, it's either you waive it or you don't. And that's the biggest tool we can have. But there's ways we're going like a pre-inspection. So if I can have like a pre-inspection with Jonathan on the appraisal side where you're protecting the client saying, hey, look, and again, not every house is going to get it. But if there is a chance that we can stay safe even in the event, we're going to take it. Like we're going to take it and make sure that we're putting our clients in the best possible position to win.
And I think that's the question you have to ask yourself, right? Because this will go off on a bit of a tangent, but stay with me. This isn't about trying to capture all the business from everyone because we're the only people that do this one thing. No, this is about making sure that you can protect your clients if it comes to that. We say this all the time, like I truly believe if you're good at your job, you work hard, you know what you're doing, there's enough business out there for everyone. This isn't about stealing business. This is about educating agents and buyers that if it comes to that, we got you, right? And that's what we talked about at our event the other week. I appreciate that you included, like you have another lender that you work with. That's very, very normal in this industry, right? Like other agents will have lenders that they've worked with for a very long time. Depending on how long they've been in the game, they may have even gone to college together or be family or whatever. It's not about trying to break those relationships apart. It's just about us saying, hey guys, look, we got you if. Obviously, yes, we have our people that we, exclusively use us, and we love those people, and thank you for that. But it really is about like just letting people know that this exists. Because honestly, the amount, especially when I call the listing agent on an offer and say, hey, I'm Jonathan with Embrace, like I'm working with so-and-so, you've got my pre-approval in front of you or full approval if they've gone through approve to move, which we can talk about in a minute. And also we have a PVC. They're like, do you need antibiotics for that? Like, I'm like, oh, no. And they have no idea it even exists. Right. So just letting people know it's out there so that in a market like this, you have options. You get to sort of have your cake and eat it too and have that extra layer for protection.
And buyers, again, I think the big thing to know is not every house is going to require you to waive appraisal, but the event that you do, explore your options. Talk to your lender and say, hey, what would happen if this happened? Like if we came in low, say by $10,000, is there a way for you to protect me? Because we don't necessarily have $10,000 to bring to the table. If you're not in a position where your family's able to help, or if you're able to pull more from your IRA or your savings or any of your investment accounts, what are you going to do? And so you need to make sure you look at all those things. And again, sometimes the waived appraisal, 9% of the time, it'll come back fine. But that 1%, you don't want to be that person. Which leads into the next thing, which is the financing contingency. And again, another thing I think Jonathan will be able to touch on, but let's go over the data.
Yeah, I mean, similar trend, like slightly lower, so I'll leave the months up there because we have it. But yeah.
It's January, we had 26% waived their financing. Then in February, we had 29%. And then in March, we skyrocketed up to 44% waiving financing. And then in April, it came back down just a little bit to 37% of DMV buyers waiving financing. And I'll let Jonathan explain more of the implications of what the financing contingency is and what the implications are for waiving it.
Yeah. So again, very similar. Sorry about that. Very similar to the appraisal, right? It's just, it's exactly what it says on the tin. It's the financing part of the contract. So you're saying, usually, if you keep that contingency, I have X amount of days to go and get my financing squared away. And I don't mean pre-approval or pre-qual or whatever you typically see at the time of the offer being written and getting ratified, but an approval from an underwriter as they are the only people in the chain that can issue a full approval.
Mhm.
And you give, again, it depends on the situation, but 5 days, 7 days, 14 days, however long, depending on the state. I know Virginia like automatically extends and whatnot. So,
Mhm.
but that's if you have it. Waiving it means you saying like, no, I'm good. Like, I know I'm going to be approved. Now, I mean, don't get me wrong. That's what we all hope for, but it doesn't always play out
Well,
like that.
what's breakdown? What do you look for in a financing contingency? Like when someone's looking to get financing, what sort of things do you dig into? Is it just like, all right, like you have a job, you're good, or like what
No,
do you go
and that's the thing, right? So a pre-qual, yeah, that's fair. Let's go through the stages, right? So pre-qual is basically we've had a chat. We may not have even pulled credit at that point. It's basically just the first touch of clicking my pen like an idiot. The first touch with the lender to get a general idea of where the buyer's
Mhm.
at. Like I said, maybe they do a soft credit pull, maybe not. Depends on the lender, depends on the client, but it's really just I'm taking you at your word,
Mhm.
like me to the buyer. A pre-approval takes it one step further. You're going to pull credit, you're going to look at income, assets, liabilities, and a bit of a deeper dive into that. Not enough to issue an approval though, and ultimately I can't physically do that. Only
Yeah.
an underwriter can do it anyway. So even if some loan officers, and I like to think that I'm one of them, I try to make the underwriter's job as easy as
Mhm.
possible, as does my processor. Shout out to Rachel, she's amazing. Um, and do everything that they would typically do
Yeah.
that we can, so that when it gets to them, it sails through. But ultimately, that's still not an
Mhm.
approval. There are still things that can pop up. And then the underwriter does that super deep dive. I mean, like some loan programs require reserves, so that even after the transactions happened, you have a certain amount in reserves to cover X amount of months of your new mortgage payment. Um, some are not happy when there's gaps in employment. Then there's self-employed. So you have to, all of the nuance that,
Yeah.
that comes with making sure the buyer is fully squared away and can move forward with that transaction. Um, Honestly, for me, I think it's even scarier. I say scarier, but I feel way more comfortable than waiving appraisal, obviously because we can protect them, but than waiving financing.
Yeah.
Like I can do, like we do our due diligence. Trust me, we do, and we go into everything, even at the pre-approval stage. But the financing falling apart is there's no real workaround there. I mean, don't get me wrong, you pivot, you look at other programs, but I'm just saying, like, if it truly falls apart, it doesn't happen that often that we miss something, but maybe sometimes they were disingenuous, or again, not trying to put it on the buyer, but you just never know. You waive that and you're done.
Yeah.
I mean, you're just done. Like the transaction's over, and it can be a myriad of things, but it for me that is a big one to just waive and have not really done a deep dive into all of those things that could potentially cross.
A real life example of why the financing contingency is so important. So my business partner, who also happens to be my mom, uh, she had a client write an offer, and there was 10 offers on it, and so they waived financing, and everything seemed fine. But literally the next day after ratification, his boss fired him, and he's freaking out because, all right, I'm going to lose my earnest money deposit. We waived everything. Now, fortunately, and this is what you get when you work with us, but my my dad's company was able to hire him for the short term, so as an employee, so that covered the financing. But not everyone's that fortunate, and so if you waive financing, you're basically saying, all right, I'm not going to lose my job.
Mm-hmm.
I'm not going to open up a line of credit.
Don't
You
go buy
know,
that Ferrari.
yeah, I'm not going to buy a car or a boat or anything, or I'm not going to do something that's going to affect my credit score or my financial ability to buy something. So it is a big risk because you're basically saying, I can buy this house no matter what. And even if that's not the case, you're putting yourself in that position because that's what the contract reflects. And so, again, when you're parlaying appraisal and financing, sometimes the appraisal may play into the financing because if I have a low appraisal and I have to bring up all this extra money, I may not be able to get
How does that
finance.
affect my numbers?
Yeah,
exactly.
and so there's so many things that come into it.
Yeah.
And again, we haven't even touched base. So this will be a completely different episode on the home inspection and what does it mean to waive a home inspection, what financial implications are there. So there's so many things, and so that's why, when you talk to your lenders or anything like that, hey, what sort of things can you do to protect me on the financing side? So Jonathan, what can you do to protect the buyer on the financing side?
Well, I'll bring in my priest and we'll pray over your fight. No, I'm joking. No, I mean, so we touched on who can do what in the process, right? A loan officer can give you a pre-qual and a pre-approval. An underwriter is the only one that can give you a conditional approval and then a full approval. So again, being forward thinking, embrace, we got the PVC, we got that. What's another area where we can protect our buyers? And that's where approved to move and subsequently approved to close come in. Procedural things that we do and we offer before they even find a house. So we can do this with what we call a TBD address or no address. So it's really just an assessment of the client's financing, and we'll underwrite them up front. We can stop at conditional approval, and the condition would be find a house, right? Obviously, we don't have the address yet, but we use we'll pad out the taxes and insurance to make sure there's no surprises with the numbers, and same with the rate, just to make sure we always go like to their max and make sure it's nice and comfy for them. Or they can jump through a few more hoops and we can have them cleared to close before they find a house, which is wild. Bit more legwork, but again, then you can truly waive your financing, and not just for the clients to feel nice and comfortable that they've done that, but even you as the buyer's agent get to present an offer with an underwriter's approval, not a pre-approval that they got from like loans.com or whatever. Don't get me wrong, they will, with a pre-approval they will have pulled credit, even if it's just soft, like they'll have done something to get to the pre-approval stage. But an underwriter's approval is always going to smash out a pre-approval or a pre-qual. It just carries that much more weight.
Absolutely.
So
so let's just say to guys, to wrap it up, and I think that's how I'm going to title it. Should I waive appraisal? Should I waive financing? I mean, these are questions that, one, your agent needs to discuss, and then two, you need to have a conversation with, say, someone like Jonathan and say, hey, is this a viable option?
Because I think that's more what it is, right? It's not should I, it's can I. And in both scenarios, whether it's appraisal, financing, or a combination of waiving both, making sure that A, they fully understand what they're getting themselves into, and then B, offering the protections that only we can offer. I mean, it doesn't make logical sense that you wouldn't protect your client the same way you would protect yourself or your family. It's a no-brainer, honestly.
No, and again, I think, guys, especially for our first-time home buyers, if you were Googling or asking ChatGPT or Claude or whoever, should I waive appraisal? Remember, if you don't feel comfortable doing it or you can't, your first house is not your dream house. It is your first house. You will eventually move up. You will move out. You will do wherever, or you might hold on to it as an investment property later. So don't think like, hey, if I can't waive appraisal, I'm not going to be able to buy a house. That's not true. We're not saying we're not pro waive anything. If we can keep all of our protections, we're keeping our protections. But understand that you will eventually be able to, if it ever came down the road, or you'll find the house that'll fit your needs for the time, and then your dream house will come eventually, whether you build it or you find it. But again, it's important to have the crucial conversations ahead of time with your agent, with your lender, to understand where am I going to go, where are my protections, and most importantly, how am I going to keep my money safe?
Yeah, no, for sure.
Cool. All right, guys. Well, that was the first episode of Bids and Banter. I hope you enjoyed it, and we'll catch you next time.
Maybe more banter next
time. Maybe more banter next time.